Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I am streaming from Costa Rica on a tin can in the string, so apologies if there's going to be any kind of intermittent stream today. You guys can let me know if there's any issues. I'm not streaming in Discord because of bandwidth issues, so this will be where I am streaming. Appreciate all you guys stopping by. If you have questions, please post them in Discord. If you're in the Traders Lab, I can see them. And also, if you're visiting in YouTube, please drop any questions or comments in there. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today I wanted to focus on something maybe a little different. I want to talk about context and the dilemma that faces many day traders as far as staying in alignment with the market, especially developing traders who see the wiggles and everything and think that's what day trading is. Day trading, at least in my opinion, is being very patient and waiting for an edge. And what is an edge? It's just not a wiggle in the market and something, a structured trade, based on the 60 PDFs I've shared in the Trader Lab that you guys can reverse engineer. That is not what this is all about. A structured trade is really the basis or a template process that you can use and get a head start so you can then reverse engineer it. And this is what I've always said. Yet I understand human nature and FOMO. Of course, we all understand it if we've been trading, and that we see something and we think it's plug and play and it's mechanical. Well, it absolutely isn't. In the scheme, if you will, or the basis of trading, it's really about the statistical edge and knowing where these edges show up and waiting for them. And I want to show you guys the recent intermediate or high time frame, depending on how you define that. Because I think it says a lot. If you haven't noticed lately, and this is the volume profile, and basically what we have is these are consolidations. And what I've done is I draw profiles over the swing highs and swing lows, and it allows me to see the volume or the distribution of participant behavior inside of these areas. And if you want to look at this or think about what happens in an auction, we get a price that might be too high. We run out of buyers, and that's where you can see the volume dries up. And then we get high volume, which is considered a retail price or a fair price in this area. If I break below it and start a new distribution of volume, and just think of it as volume, nothing more. And if this now becomes too high up here and I test it and reject it, what it says is, of course, too high. And then as we build volume, and if you see this red line here, that's called the low volume node. And what it is it brackets these rotations. And what a rotation is an auction. Well, what's too high? What's too low? What's just right? And the thing is, if the participants, which have now said this is too high, do their thing over here and they reject it by closing below it, it can suggest this area might be too high. And then the market does its thing. And the market squeezes and goes up and goes, all those wonderful things that we enjoy. The market is not one-sided. So let's assume, and I'm going to suggest potentially we're in a bear market. Now, that's just an opinion, and everything is subject to change. We are not in the same market we were going back a month ago or 2 months ago. We are not there. We are in a different game. So other than as a day trader where we basically trade both sides, you might want to think about this as squeezes. So if the market squeezes, then we will get these intermittent moves to take stops out on other sides of the market. Like here, for example, we squeezed up, we opened, we got the stops here, but notice what we didn't do. We couldn't get over this, and then we closed lower. Now we start a new consolidation. They're inside of each other. And what do we have here? An auction that is too high, another low volume area, and another low volume area. Does this look familiar? What are we doing? We're stair stepping down. I think this one's a little out of whack. Hold on a second. Same here. Too high. And then we break out again. So we are stair stepping down. This is classic bear market. Now, yesterday was really important. And this is something, if you haven't thought about it, then you're getting a little too myopic if you're a day trader, in my opinion. I always suggest in Trader Lab that developing traders pick a side and to go with the dominant side. If you're a developing trader and you don't know what the dominant side is, you got a lot more work to do. Because as they say, what is it? The force be with you. The force is the sellers. The counter rotations are opportunity to dump stocks. That's what you're seeing here. So what didn't happen yesterday? Do you notice what we have from yesterday? What do we have? A low volume node. We have too high up here, too high up here, too high up here, and then we have that low volume node. And when we fall out of this, out of here, now we start a new distribution. And the nature of the market is to come up and test and take stops. Didn't we only one tick this yesterday? James, these are RTH candles. If that's what you're asking. So what does this tell us about yesterday? The best they could do is muster, what was it, one tick? One tick. And you have shorts in this leg from over here, and we could certainly squeeze. They couldn't do anything. It was a feeble attempt. For me, that is extremely bearish. And suggest taking out, well, yesterday's low, this low, and continuing down. Our target, and this is not a recommendation, initially is 54. Can't quite see it, but I think it's, hold on. By the way, this is Investor RT. I use it for my higher time frame charting. Does a great job. 55.34 will be a breakout of this consolidation if it happens. And I think this is 54.98-ish. This is called the naked volume point of control. This is the highest or volume retail price from the last time we were down here. I don't even know if I have it on my chart. But whenever that is, let's see if we can find it. Over here, from this day. So this was in August of 24. We were down here. That is our next target. Now there's another little piece here that you might find unique. And this is what makes the auction for me such a key piece of understanding market mechanics. This yellow line is the same as that yellow line. In other words, this is a retail price from yesterday. If we were weak and we couldn't take out this high except by one tick, and this was where the high volume was, think about it as retail. And if we open below it and we test it from below, I'm not paying that. Then what does that leave us? South of the border. See you later, alligator. Catching the next life, not this one when it comes to the bull market. So global economics have been, shall we say, flipped on their head. And for the market, that is not a good thing. And it's not just how it impacts here in the States, it's impacting globally. So that is kind of what's behind this. Call it the great unwind. So, and it's not a political statement, and I understand everybody's sensitized to politics. This is just economics. Simple, not complicated. Anyway, I hope you're getting something from this. So the key to this whole discussion, if you will, is that you need to be in alignment. So one of our members in Trader Lab posted something a couple days back, which I watched. It was about a trader who does a funded account and with a popular firm. And he was a loser for a long time, like most of us are when we start out trading. You know, we can't figure this out. But what he figured out was only trade when you have an edge. And that doesn't mean take a lot of trades. It means only taking the trades that present themselves. Now, he's going to be taking let me just say, a several $100,000 withdrawal is my understanding. And, you know, I have to say that's not confirmed, but that seems to be the case. He's, shall we say, turned the corner. And why? Because he has a disciplined trade plan. And when I heard, it was so interesting to me because when I heard what he discussed, it was everything we do in Trader Lab. Only trade when you have an edge. Be patient. Know where your edge is. Keep statistics. It's the only way. And if you're not willing to do the work, unfortunately, your odds of sustaining yourself are not good. So that's something you need to be conscious of. And if you say to yourself, you know, I want to be a career trader, I want to be in this business, I am having some data challenges. How are we doing in YouTube? Are we okay over there? You guys, am I hanging in here? I'm getting a lot of latency spikes and problems here. Are we okay in YouTube? Okay, great. Thank you. Okay, I am having data lag and some other things going on here, so please excuse that. Let's get back to the RTH opener. Let's talk about it. Now, there's so many interesting things that happen, you know. And if you stop and think about what the market says, it is always suggesting, if you listen to it and understand the language of the market, you can give yourself potentially not what will happen, because that doesn't exist. By the way, I'm on a tin can in the string here in Costa Rica. I'm getting some really unusual spikes and data lags, so hopefully this will be functional for us. Okay, one moment, guys. So let's go to RTH opener. But before we actually talk about the RTH opener, let's talk about what happened. Yesterday's high, okay, ETH high. Now, we have what's called the micro composite, which was 50. Let me just make sure I got this level right. Yeah, 56.20. Let me show you this. Because this is how you can put pieces together. Not including today, which is not in this profile. The highest volume for all of these days, so the last 3 days, not including today, was at 56.20. That's like retail. And if we get below this 56.20, it might say it's too high. Now let's take a look. Let's come back now. ETH high tested that 56.20. Too high. There's no precision. These are all ballpark. Yesterday's highest volume or retail price, I'm going down in fractal as you think of them, or time frame. This is too high. So, too high in the ETH, and then today we test yesterday's retail price. Well, if we won't pay it up here and we won't pay it here, what does that say? South of the border, hasta la vista, catch you the next time. Yeah, I'll send you a gift basket. So for me, and for developing traders, I would suggest shorts only, unless you're a counter trend trader. What is the trend? It's down. So what does that require? It requires that you are patient and you have to wait for a structured trade. If you do not have a trade, guess what? Your job's to wait. If you can't wait, that's FOMO. You put yourself out of the business with that. Absolutely. Don't even think about it. You will not be the exception, in my opinion. Maybe you will be, but my opinion says not so much. So, ETH volume point of control. This is the ETH version of that. This says in the ETH, the highest volume was here, the overnight volume point of control. All volume point of control is high volume. And high volume is like going shopping. It's in the store. And if wherever the high volume is, it's a retail price and everybody agrees on the price. There's only one small problem with this. In the marketplace, the market's always seeking a fair price. And that's why at auctions, it goes up and down and runs around because it's trying to figure out what's too high, what's too low, and what's fair. But here's the other part of that. Suppose we find out what's fair and then it changes. Now, what was previously fair becomes unfair. And what was previously fair becomes unfair. And then if something changes and we're in a bear market, maybe, it's just an opinion, but, you know, it's up to you to determine what it is. Doesn't matter. The dominant side is the selling side. So if we get rotations, counter rotations, then sell it if that's in your plan and you have an edge. And I'm always going to say it's not a specific trade recommendation because if you're going to get short, you got to do it at the right location. So the fact you see like a little consolidation here and a triggering structure, that's not a short unless you have an edge here. Why not this one? Why not this one? Why not this one? Where's the difference? The difference is it needs to be at a location. If it's not at a location, you don't have a trade. If you're pushing it because you, quote, want to trade, then you're on your way out. Now, you're going to see rotations, and you're going to think, I should have. Well, that's FOMO. You should have followed your plan is what you should have, unless you have an edge here. You might have an edge at the overnight VPOC, but maybe not. So where was your trade? Where was your trade? Let's go take a look at some of these. Now, this is a buy sweep. You have 604 buy stops, 48 selling icebergs. And what I often see with sweeps, and I discussed this in Trader Lab, one moment, just looking over at Trader Lab to see if there's questions, please post them. So if we get a sweep, that often sets up a counter rotation. Now we come back to VWAP, and this is also a sweep. You got a sell sweep here, a buy sweep here. Sell sweep, and by the way, it's not mechanical. It's just showing us a sweep. But when you study order flow, and if you have a tool like Bookmap, these subtle behaviors give us an idea in order flow of what we might anticipate. So when I see this, I can anticipate a rotation down. When I see this, I can anticipate a rotation up. Doesn't mean it'll do it. Here, you see a rotation up. Where's my rotation down? Here you see what I'm saying? So nothing is mechanical. Trading is it's not like that. Here you see so you get your sell sweep here, you get your rotation. This is your retail price. If this is too high, we can leave it. If this is too high, we can leave it. If this is too high, we can leave it. This is called VPOC migration. And what this is saying is the shoppers or the traders are saying this price is too high, this price is too high. and this price is too high. So we are in, you might say, the bearish move. And there's a little bit more to this. Up here, we have our naked volume point of control. This is our retail price. What did we do? We came back to it, tested it within a tick. This is a direct hit in the volume world. And we had our sweep. That sets up a short in the Trader Lab. And all these are shorts in the Trader Lab. Yesterday's low, no problemo. I don't know what some of these things are in here. And we're pretty current. So subject to your plan, there were no longs today, unless you're a counter trend trader, which is all fine. Shorts, there were actually a couple of them, but the cleanest one was this one. The other one, you might have grabbed one over here, but that's not really a structured trade. It's close, with the ETH low being the target. This one, though, is very much Trader Lab oriented, structured, and that would take you down to yesterday's low and then trailing. And remember what we're looking for. And there's more stops under here, by the way. There is more coming, maybe. Let me take a look again. Oh, yeah, you're going to like this. So all this is on the hit parade. Now, here's the question for you. Do you feel because you're sitting here, the next stops are right here at 34. So all these are targets for today, and then maybe 54.98. Questions, guys? I know this isn't very exciting because you don't get to push the mouse, but I think we have to remember why we're here, and that is financial gain, profits, take intelligent risk, not gamble. We do take risk, but that's why we have the opportunity to get paid. Taking intelligent risk, I think, makes more sense because we're going to take stops anyway to protect our account. But are you trading? Where are you trading? Are you trading in here? Where are you trading? Are you buying this? That's the question. Now, I don't know what you guys are doing, but if you don't get in alignment with the higher time frame, you're really just taking yourself out of the business. And I don't like to say that in the sense I always think hope springs eternal, but there are certain things we observe over the, for me, many years working with many different traders, and I've coached a lot of traders over the years. And if a trader cannot do the work so they know they have an edge, and you can talk to anyone in Trader Lab who actually is a profitable trader. We have a fair number of profitable traders in Trader Lab. You might ask them, and I would invite you all to come to Trader Lab. Just ask, what are you doing? What did you have to do? What have you changed? And what about discipline? What about resisting the urges and the impulses? How did you get your head around that? You should ask other traders who've dealt with the same issues that we all deal with. It's more difficult than you imagine because we don't give it what I think it really deserves, which is a real self-reflection. Why am I doing things I know are not in my best interest? The reason is because of Hyde, Jekyll and Hyde. Hyde's that primal lunatic who is under the hood, the reptilian brain, which is, fight and flight kind of a thing. So when you see a rotation, you want to get it, and you're compulsed to do it. It's not your intention to do it, but when you're right here, right now, you're looking to do it, and that'll take you out of the business. It's really different. So we focus on that in Trader Lab because it's like the plague. This is why retail traders, among other things, do not have sustainability, and they think and you basically behave like it's a video game, which it's not. Well, CMJ with the CMJ's mentioning about the short at the against this. Well, it doesn't have to trade through it. It doesn't. It can just get near it because this is the retail price. So now, if it's in your trade plan, it has to test it. Then you did the right thing for yourself. But what I have here, when I'm looking, now I'm just like you. I'd be sitting here going, you know. But what do I know? I believe we took this high out by a tick, I think, and you guys can confirm it. I can't see it over here. And because I'm on a laptop, so it's a little hard to see stuff. And we had the sweep. So right here, I see the sweep and I get the break. And I have my, and what do we know about developing volume point of control? Well, we know there's two possibilities with this thing, and they work the same way. So if this is the volume point of control, or highest retail price at the moment, and from yesterday, this was the highest retail price, and I'm below it, it might be saying this is too high. Now, here, I get my VPOC migration, and I always suggest everybody do a review of that webinar on this specific behavior. When this shifts up, it's the new retail price, this yellow line. It's the highest volume so far during the developing time frame. And it can do one of two things. It can move higher or break lower. And this was the most recent price, was here. This is support. This now is resistance. Support, resistance, and the next one up, resistance. I got support, I got resistance, I got resistance. I break below support, support, because resistance becomes support. So resistance, support, break below, resistance. This sets you short up right here or here. Does that make sense, CMJ? You guys still hearing me okay? How we doing there in Discord? You guys able to hear me? Yeah, okay, CMJ. Yeah, you're welcome. Okay, guys, how we doing in YouTube? I hope the audio and everything here is sort of working. Been quite a problem here in Costa Rica. So, too high. VWAP, I think. No, maybe not. Can't tell. By the way, there's no daylight savings time in Costa Rica, so my computer doesn't know whether it's coming or going. So VPOC migration, this is too high. VPOC migration. Now the VPOC migration is also a concept that I came up with, and I'm sure it's been out there, except I've been doing it for many, many, many years. Kind of fell over it and was trying to understand why. You know, you always look at stuff and you go, what's going on? Why is the market, why is this now too high when it was too low over here? What's the significance of that? What's the significance of coming back to a level that was too high, that might be too high? And again, might is all you got here. What is the significance? What does it mean when it breaks below this and doesn't get back above it? It is a shopping experience. Think of this as shopping. What does it mean when this shifts lower? Well, that means it's now the new retail price, too high, new retail price. What's it mean when I come back to this and I can't get back over it? It's too high. What's it mean when I come over here and it shifts down? What's it say? That's too high. What does it mean? South. Potentially. I always got to say potentially because it all can change on a dime, right? So if you're in Trader Lab, I would suspect if you're trading the short side only today, you were potentially, and if you waited for structured trades that have an edge that you have vetted, you're having a pretty darn good day. If you're making it up and clicking the mouse, you are not having a good day, and you will, in my opinion, probably not ever have a good day until you do the work and develop the discipline to only take trades with an edge. Do you realize that you only need 1 or 2 trades a day, and you can have yourself a potential profitable business? And if you're clicking the mouse randomly and chasing the market around, that's not what traders do. That's what retail traders do. There's a big difference between what retail traders do and what developing professional traders do, career-based traders. And if that's what you're doing, I would say take a time out. Do some self-reflection. Think about, what are you doing? Why are you doing it? I understand the motivation. We all want to capture dollars. I get it. But that's not how you do it here. The things that most retail traders do, take them out of the business. So if you're doing it, then maybe don't do it. Yeah, thanks, Jeff. No, I'm not trading here in Costa Rica. Yeah, no, in this condition, I won't trade. Actually, I have snuck a few little micros in here and there, but it's just not worth it. I would not trade by typical package in here, and no. But I did trade a few micros just to check it out, and it seemed to work okay. But I use limit orders, so it's not a big issue for me with the lag. But no, I'm not that interested in trading here. That's a fair question, though. Yeah, Willers, I'm staying at a different location. I went from the frying pan to the fire. Where I was anyway. I'm about 5 hours from where I was previously. I came to a location where I thought I'd have more stable internet, and it seems infrastructure is a little bit of a challenge here in Costa Rica. Yeah, you're welcome, Espen. I'm glad you're getting something out of it. I kind of I went through a horrendous learning curve. There was no off-floor traders when I started, so I was really there was no information. We had no computers, no internet, nothing. So it was like being on the desert. And all my buddies were floor traders, so they had no clue as far as what I was trying to do. They thought I was out of my mind. Looking back, I think that was accurate. But I didn't know enough to know what I didn't know. And a lot of retail traders, I think, don't know what they don't know. And especially today with all the information out there in the inner world, and anybody can become an expert. I'm sure there's some good material out there, but I would say a lot of it is not worth your time, and you'll end up wasting, generally speaking, a lot of time. And I know the concept, well, at least I got something out of it. Well, not necessarily. You might get, the only thing you need, whenever you see that kind of hype, just go the other way. I'm going to tell you here in the Trader Lab, this is work. There's no holy grail. There's no secret sauce. You really got to kind of break it down and learn to understand how the market works, and learn about yourself. The self, that is really the key to this. I believe if you come to Trader Lab, anybody can learn to trade if they do the work. It's a terrific community of like-minded traders who come together to leverage their experience. We have senior traders over 50 years. I've got 45, both professionally and here with you. And I've done just about everything out there that I'm aware of. And there's always a new twist on an old, concept. So I see that, and I always kind of chuckle when I see things out there that we've been doing forever, and somebody puts a label on it, and everybody gets excited, But there's really nothing new. Anything in the retail space has been gone through by everybody who's walked in your shoes. So I'm going to suggest maybe don't do what they do unless you have an edge and you're a consistently profitable trader. I always like to mention this because it was a fallacy for me. You have winning trades and you think that all you got to do is make what you're doing is better. It's logical. But gamblers have winning hands, yet the casinos extract the dollars from the gamblers because the casinos only play games that have an edge. So we still win, but we don't win enough. And we even have runs. where we have winners. And we think, yeah, I got it now, and then not so much. That's typical. And that's what keeps us as retail traders maybe going down a path that has no sustainability, yet we don't know it. So we keep tuning and tweaking. And I did a webinar on it called Trader Groundhog Day. I think it's pretty cool because it was me. I just talk about me. I don't have to talk about you. I'll talk about me because we're all the same because we're human. And remember where we're trying to go here, south of the border. Let me see. And let's come back to our higher time frame. And if you're not looking at the higher time frame, you're kind of missing the point. This is the trend. It is down. Like I said, I suspect, and it doesn't matter as day traders, we're in a bear market. That means squeezes and opportunities to sell. Squeezes, opportunities to sell. Potential squeeze, like here, squeeze, opportunity to sell. So in Trader Lab, I would suspect that primarily you sell the counter rotations, and there's going to be days with big up days where the big squeeze comes. That's the nature of the market. It gets out of balance, they're going to squeeze. But when we squeeze, it takes out the weak shorts, which it will, and then we get the opportunity to sell it again. So traders can trade either side. It's not about a right or a wrong. You may find, though, especially as a developing trader, that your edge exists going with the stronger side, the side that's looking for counter rotations to dump inventory. Which side do you want to join? Very important. And if you're in Trader Lab, I think this is something you ought to take to heart and think about. I am staying at a new location, and I'll tell you, the one with the monkeys swinging on the vine was better than this one, which is hard to imagine because I'm supposed to be in a place with more stable infrastructure. And I don't think I have enough bandwidth to be doing Discord and YouTube at the same time. So for the time being, I'm going to just stream on YouTube. Please give a like if you're in YouTube. I hope you're getting something out of this. I'm a little low energy today. Hopefully I'll be in better shape. Give you 150% as I always try to do. So there's a little bit more I want to show you, actually. That was interesting. I was sitting here last night and I looked at yesterday's market and I'm going, oh my goodness, this is a great short setting up for today. Did you guys think about that today? Did you think based on yesterday's behavior, what the market was saying to you? Did you come in thinking short? Or what were you thinking? Or were you not conscious of the higher time frame and what didn't happen? The way I kind of try to organize things in my brain is a narrative. If this, then that. If not, then what? If we get into yesterday's high, this is day before yesterday, right? If we take out yesterday's high, we only one ticket. If this, then that. We get into the previous day's high, then we're going to squeeze. And we only give it one tick. If this, then that. But if not, then what? Then south. What a feeble attempt yesterday was. Is that the best you can do to squeeze? That means there's no buyers up there. They just picked some stops. It was like a gasp for the longs. That's how I saw it. So that to me said today, short, 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 short. No longs. Now, it doesn't mean you can't take a long, or even me. But for developing traders, the edge is on the short side. The question for this astute audience, whether you're in YouTube or in Discord, Trader Lab, are you buying this market And I'm not saying you can't. I'm saying, were you buying it? And if you were buying it, why? What gave you, based on what happened yesterday, what gave you any inclination that you should be on the long side? Especially where we opened, especially because we opened below the naked volume point of control, yesterday's retail price, and we even opened below the overnight volume point of control. So I'm asking the question, and it's not punitive. It's because that says you're missing a big piece to this, and you got to step back. You're not here as an hourly worker to click the mouse and play trader game. You're here to wait patiently for the trades you have vetted, and you already know where the trade will show up. I always know, I know where my trades are. I don't know when they'll show up, but I know where they are, and I can anticipate them. When the market starts coming towards a location, I then zero in on the location and the behavior that might take place there. And then I'm looking for a trigger. I put the trade on, I take a stop, or I get a scale and take a stop, or it does its thing. That's trading. And if you're not doing it or thinking about it that way, then you're not anchored. In fact, I did a primer webinar on it, and it's in the Trader Lab. And by the way, you're all welcome to Trader Lab. There's that link in the bottom of YouTube if you're inclined. There's no cost for it. And there's a library of webinars and, of course, the Trader Lab community, which is a group of traders, as you know, who've come together. And it's I'll just show it to you here. So there's a lot of going on in here. Let's see what we got here. Charts, posting, all kinds of stuff in here. Great community, a lot of information. There's also a library of webinars in here. Let me just show you that. And it's all available at no cost. Primer webinar. This one is really good. This is I planned, I saw, I traded. And it's really about the entire process, and it's about an hour and a half, and it shows you how I put all these pieces together. Now, here's another one, day trading, why most traders using indicators fail. If you don't understand why the market does what it does, how it manifests itself, you might be missing the forest for the trees. Indicators are fine if you understand market mechanics. No problem with indicators. The concern I have for developing traders is they put the indicator first. It's kind of like the tail of the dog versus the dog. The tail is not wagging the dog, and the indicators are the tail. Are you trapped in trader Groundhog Day? That's one I always talk about because that was me. Working hard, winning trades, waking up, getting the same outcome, then trying to make it better, winning trades, waking up the same outcome, a little tuning, a little tweaking, same thing. So that's available to all you guys. You can use the link in the bottom of YouTube if you're inclined. I think it could really move your business forward. Now, I wanted to show you a couple other things here. Now, the market tends to, well, we got some weird stuff in here. Guys, you certainly don't want to try to do this when you don't have a stable data source. It's a bit of a problem. I want to show you these things. So this is our high of the day, okay? When you start looking here, you see clusters of volume. This is an auction. Too high, too low, too high, too low. This is made up of volume. The retail price is right there where the high volume is. If I leave it, I can start another one. Now, these are microstructures inside of a higher time frame as you think of it. Now, time is not anything I use except in the, like daily candles and that kind of thing. But as the market develops, it rotates. This rotation that you see is an auction. So if this retail price is too high, I leave it and I start a new one. And as I move along, I'm rejecting these prices. It's going, no, I'm not paying that. What about here? No, I'm not paying that. So if the market rotates out to these edges, I can sell these edges and trade a rotation if there's enough range. When I fell out of here, it says too high. This is the retail price. And this is the highest volume for the day. So the market sequentially auctions and either goes, yeah, okay, or no, I'm not paying that, and it leaves. Now we come down here. I'm going to show you something a little different. Now there's a number of different concepts involved in this. One is directional movement, or in other words, as you think a trend, okay? Trend. And what's the overall trend? Down. How do you trade a downtrend? Well, I don't know about you. I don't like to sell the low. I like to sell towards the high, or at least the counter rotation. So how do I trade a counter rotation? Well, if I fall out of this distribution, which is the volume up until here, so everything that went before this is the outside edge, and this is the outside edge. You can see these lines up here. In fact, let me try to turn something on over here for us. Hold on. Flip a switch. Okay. So if we fall out, now this is the outside edge, this. So when I fall out and I pull back in here, I can sell this for continuation going down. Just saying, it's something you could do. This is also VPOC migration. This is also a potential short, and it's a little more advanced, but it is in the Trader Lab. By the way, I don't, Dan, are you in here, Dan? Maybe, let me see if I can do this. Thanks for posting that link. Guys, I'm putting a link here in YouTube, which I invite you guys to watch. It's a full overview of what I'm doing here. And it's out of the library. And thanks for posting that in Trader Lab. I don't know who did that. I think it was Willard. I can't tell. Willers, I should say. So, but watch that one, okay? So this is too high. There's our sweep. This sets up a microstructure. This is a short. I'm going to give you a little detail here now, assuming everything is working reasonably well. Let's see. So this is a consolidation, and you can see the high volume there. So I have my sweep, I have my chop, I have my trigger, I come back, I get a sweep. This sets up a short. You could sell it against here, right there. I'm going to put a little box around this thing so you could see it. You could actually do it here, doesn't matter. This is where the sellers take over. Trigger, short, stop here, hold, if you want, for continuation trades. This is your outside edge of this low volume node. We have another one developing here. All it's telling us is where we left this behind, and now we're down here. That's what it's telling us. It's the language of the market. Next low, I believe, not sure, did we get the stops under? No, we're still going for 34. So down here is our next target here. And I anticipate that'll get taken out. Just a matter of, and notice where we pull back. This is a selling structure. This is a Trader Lab methodology. So you can sell this, get risk neutral, stop stays up here. You pull back here, you can sell this, stop over here. It's the same trade, and you're going for this. Not a recommendation. It's whatever, right? So these are all structured trades. You could learn this. I'm not saying it's something you should do, but you can learn it. And if you learn it, it's going to help you develop an understanding of market mechanics. This is not complicated. This is a consolidation. What is important about it is the language. What a consolidation is really an auction. This is too high. The buyers are here. The sellers are here. When I get the sweep, remember we were talking about sweeps earlier. What happens with a sweep? We go the other way, potentially. What do we get here? Big sweep. What does that say? We go the other way, potentially. Can you see how you can take order flow and start putting these things together? By the way, if you're in YouTube, I posted a link just up there. Definitely save that link and watch it. It'll potentially open your eyes, I think, for the potential. One moment, please. Are you guys following? How are we doing in YouTube? We doing all right? So we're looking for this, and remember what our outside target is, not a recommendation. This is where we're looking for today. And it doesn't have to be today or ever, but we take this out. This is the last place that was too low, and it's back from August of 24. So if you think we might be in a bear market, other than squeezes, what's your plan? Have you thought about it? Espen, when you're asking how would I distinguish the zones as they develop, I'm not sure what you mean. If you could be more specific. So currently, we have this as our distribution. So this outside edge here is, we can rotate around here. So if we come up here, and we already did it, but if we come back in this area, this sets up a potential area to observe. I'm going to try to modify this thing and drag it over so we can see it better. So before it scrolls off the screen. So this is our area. If it comes out here, it's a low volume node. It's right there. We might look at it as an interesting opportunity to observe it. Okay. So let's see how it behaves. So we're still going down for this. So at the moment, that's kind of the deal. If we continue to move downwards, Epson, I find it harder to see the rotation as we have spent less time there. I still don't know what you mean. Harder to see the rotation. Well, this is a short. That's a short. Structure, micro high volume structures right here. All these suggest lower. You can be using these. If you're in Trader Lab, you'd understand what these are. These are auctions, and the market is saying at the moment, well, too high. Hold on a second, guys. Okay. So you can sequentially narrate this. Trigger, test, short, squeeze, back to here, another short, trigger, test, short. Now, these aren't shorts. What they are is ways to manage your trade. Trigger, test, continuation. This is another part of the process you could learn in Trader Lab, and it's everybody does their own thing. We have traders in Trader Lab who are going to leave their stop high of the day and go to the gym, and we have other traders who are going to more micromanage. It's all a matter of your psychology. Other traders in Trader Lab may take this, put it on, get this, add, scale. It's all a matter of how advanced you get. But you don't have to be advanced. What you have to be is able to sustain yourself as you develop. If you're in a hurry, you're not going to have a good outcome, in my opinion. At least I haven't observed that over the years. Everybody thinks they're special, but it's all manifestation of FOMO. So if you're in a hurry and you want to push the button, you're seeking a dopamine fix, really. You're not seeking a career. Trader Lab is for traders who want to be in the business. It's career building, understanding the reality of this business. It's not what you think it is, most likely. It's not your indicators in the right time frames. If it was that easy, we'd all do that. Everybody else has done it. How do I increase the SVP? You just drag it. Yeah, you could adjust any of these columns, just grab it. This is the Trader Map Lite. It's really good. It has a filter in it because we have a bracketing algo in the front month, this thing. I don't know about you, but I'm not interested in that. So this Bookmap came up with this. It's really great. You can execute right off the chart if you choose, which I do when I'm trading, and you can set it up and many contracts as you want. And I use bracket orders. I don't like to fiddle around. So I just put them in and then I drag them. Brackets or limits. I enter on limits. My stops get placed. I can move my stops. I can move my targets. It works out very nicely for me. So it's very, very cool. Now we do have, let me see if this actually set up here. We have a trade. Might have missed this. Let me see. Yeah, this is interesting. This is the IB continuation trade. I missed this one. This is a structured trade in Trader Lab. And what it is at 9:30 Central Time. Got to remember, Costa Rica, it's 8:30 here. 9:30 Central Time. Wherever the first hour's low is, which was made around 9 a.m., if we break out of the first hour, it sets up something called the IB continuation, which is a short. Now, this is a structured trade in alignment with the trend. And this is where your entry would be, here and here. All these are continuation trades for the short. So this is a short. I believe I got that right. Is that correct, Trader Lab? This is the IBC. ODTE, IRT does export data into Bookmap Lite. You need to set it up. That's what you see here. This is IRT exporting all my levels. So yeah, absolutely does. $30-year bond auction, eh? Coming up? Well, that's always fun. That could give it a little hiccup. Just remember where our targets are below. They're not trade recommendations. It's just on the hit parade. Not now, potentially in the future. Stops are sitting up here. Outside edge is out here, this low volume node. So look at it, think of it this way. That's too high. And this looks cut off on the bottom, doesn't it? Well, typically these things are more symmetrical. So it is not symmetrical, it's just chopped off. So to me, that suggests south, not a recommendation. That's what it suggests. So if I'm sitting short, which I would be from much higher, I'm just sitting with this. And then subject to my plan and the range and volatility, I could be trading, and this is advanced. In other words, I could be trading against this, looking for the bottom to come out if there's enough range. Because this is called trading in fractals, and you can learn this. But you got to learn the broad stroke before you can ever get to the more micro stroke. You just have to be able to speak this language. When you remove your indicators, it kind of forces you to learn how to understand what's going on. Indicators do the work, right? They do the lifting. Well, the market isn't made up of your indicators. It's made up of participant behavior. So if we can understand the participant behavior, then we can apply an indicator that aligns with what we know about the market. Makes a difference, I think. My time zone currently is Central Standard Time on the charts. But where I am, it is 10:30. Chicago time. How we doing there in Discord? Everybody good in the Trader Lab? And how about YouTube? You guys have any questions? Drop them in there. I'll do my best. By the way, if you're in YouTube, there is a link down there. You can visit the Bookmap Discord Trader Lab. There's no cost for it. There's a library of webinars and, of course, the Trader Lab community and a lot of additional education in the Bookmap server, stocks, options, crypto, order flow with a high-tier tool like Bookmap, options, market maker behavior, algorithmic behavior, a lot more. When they say knowledge is power, and the more you understand the components that make up the market, the better opportunity I think you have to differentiate your outcome from most other retail traders. By the way, outside edge is there and there. There. You see the outside edge? There. Let's look. See where we came back? To this. Resistance, resistance. Let's see what happens now. And these aren't trade recommendations. What is this? This is where we fell out of this. So the auction is here. Too high, too low, too high, too low. Retail. Oh, I'm not paying that, which is there. I'm out of here. Now we start this process again. If this is too high, we can then fall out, maybe, and take this out. This is still on the parade. Now, the other thing to be considering is the market goes up to go down and goes down to go up. Whoa. So this is too high. Now, we can always come across and squeeze, but so far, unless things change, this is what's on the hip parade. The thing about trading is it's all random. We don't know when or if it's ever going to happen. That's why you need structured trades to get risk neutral. Take your trade when it shows up. Take your stop if that's what happens, because that happens to all of us, and attempt to get risk neutral. So the worst that happens is you scratch the trade, and then your broker sends you a gift basket. So let's watch this outside edge, and the market can push further out. We have to wait and see. So let's watch this outside edge, see what happens. Stops are here, stops are out here. Liz, session volume profile. This is showing us all the volume that transacts at different prices, starting at the RTH open. So this just shows us the distribution of volume, but it's the truth of the market. It's like what happens in volume. And if we fall out of a distribution of volume, it says maybe this high volume, which is like shopping, is too high, which is right there. So now we have this outside edge. So the idea of coming outside is to test this. And it is possible that we come back here. So let's just see what it does and see if we get another short opportunity. And remember, I don't call trades. Everybody takes stops. Doesn't matter, really. The idea of this thing is that when you're trading, you know what you're going to do where. If it violates structure, then what you want to be doing is thinking about maybe managing your trade, be out of the trade. But where's our outside edge? It's going to be out in here. So let's see if we get a potential opportunity here. We'll just take a look at it together. Stops sit over here, and we have an outside edge over here. So we have stops here, outside edge here, resistance is here. So let's see what it does coming up into this area. And it's not a trade recommendation, we're just observing together. So this is the area we want to see. Okay, let's look at this. Stops are here. Traders keep their stops over the IB. Our resistance is right around in here where this bottom of this bracket is. So it's in this area. Outside edges here. So we're now squeezed out these guys and we're looking in here. Let's see what it does. Not a trade recommendation. We just want to watch it. Let's move this thing over. Micro high volume structure. So we're going to look in this area and see what happens. It's not a trade recommendation. Low volume node is up here. Outside edge is up here. Let's just watch. Nothing to do. What I do is isolate areas. I anticipate them. I look at them. I'm looking at the order flow now. I see there's a buyer here, and that buy stops, selling icebergs are sitting here. I'm seeing exhaustion. This guy was potentially absorbed. So right in here is key area to observe. Let's just watch what happens here in the auction. We have a location. We have an outside edge. We've come back to resistance. And this is our little world right here. If we push up, then we have nothing to do. If we break down from here, we might have something to observe. It's not a trade recommendation. We're just going to watch it, see what it does. There's an old saying, maybe it's my saying, you got to anticipate to participate. Now, the idea of this is that structurally, we know a couple of things. We know this is an outside edge. We know that retail traders keep their stops here. We know we have structure that came from somewhere over here, which I can't remember at the moment. Too many lines, not enough time. This, yeah. So this is the structure, this here. That's why this is, what is it? Resistance. Why is this a short? Does anybody know why this is a short? In TraderLab, you would understand this. I'm not saying you should trade it, because we all take stops. I mean, but if you vetted it and you learn to understand how the market works, then you'd be anticipating this. And that's what you saw me do here in the stream. Now, the outcome of the trade is like everything else. The term I like to use, and it's not self-depreciating, is I'm clueless. Now, clueless doesn't mean ignorant. What it means is I can't predict anything. All I can do is take my understanding of how the market works, transpose that onto what retail traders do and other traders, professional traders do, and not do what the retail traders do. Think like a retail trader, but don't act like one. So if I get short here, I mean, I already am risk neutral. I always recommend, and I don't like to recommend anything, but I always suggest the traders vet a two-lock configuration. So the job of the first contract is to buy the stop on the second one, because that gives you better control over the lunatic under the hood. You know, your fear. I mean, think about it. Here, you're euphoric. You get a little counter move, you're depressed. You know, you want to bail out here. And that's what amateurs do. Professional traders don't do that. They look at it like, well, if they get risk neutral, and most traders I know who are in this business, risk management is job number one. They're going to get risk neutral. So the worst that happens is they get taken out with a scratch and the trade has to fail. It's not the trade, they fail when they bail out on counter rotations, but the trade hasn't. I suggest it's better to get out of the trade when the trade fails, not the rotations. So what's the goal of this trade, you ask? Take out that low, and where are we trying to go? Here. Not a recommendation. Are you guys tracking? Hope you're getting something out of this. This is TraderLab. How are we doing in YouTube? Please give a like to be liked, a thumb up, and smash the like button. As a matter of fact, helps folks find the stream. And I think we should help our fellow retail traders get a better understanding of what's going on here. What's this all about? What is trading, really? It's not what most of us think it is. I think it's quite elusive for retail traders to really get an understanding of what this is. And a lot of that has to do with a lot of bad information out there, I think. There is no holy grail. There's no secret sauce. There isn't the one thing you need, and it just doesn't exist. You know, snake oil's been around as long as there's been snakes. So I suspect if you've gone that route, you already know the reality, and there is nothing There is no short-term easy solution. This is called VPOC migration. VPOC migration suggests at the moment the highest volume is right here, and we left this behind. Let's talk about the language of the market. The language says this is too high. This was our retail price in the developing daily time frame. This now is the new retail price, the highest volume. Well, if the new retail price is here, what might that suggest? How about they use the term from Terminator, hasta la vista. See you next time. And that's our trade plan for today. Shorts only, going for yesterday's low, then the previous day's low, then the naked volume point of control down under about 54.98. If you're in Trader Lab and you had a vetted trade plan, that would be your trade, primarily. And then everything in between. Subject to your time frame, you can be rocking and rolling in rotations, but this is advanced. Now this is a structured trade right here. So you could be on that one and the ones I mentioned up above. So there's maybe 2 or 3 trades in here today. Would you be okay with that? How are we doing in YouTube? Would this work for you? So there's our next target, and now we're looking for wherever it went down here. This. Questions? How we doing? So this is Trader Lab, guys. There's nothing magical about trading. It really isn't. It's just, you got to find out. And I share 60 PDFs of these structured trades. You can, they're all available to you in the Bookmap Discord Trader Lab community. That's from 2020. That's lovely. Another one. And these are actual trades I took or screenshots, these are live trades. But the thing about it is, it's not what I do. It's that, can you learn a language? And I don't use any indicators. So what I did is, I came from the same place you've all come from, except I did it a lot longer than you guys, 45 years worth now. And so I got to do everything there is pretty much. As new things came into the space, I would dig into them, try to understand what was going on, maybe make them better. I built trading systems. I went down that whole path. And I found eventually that all of that was the reason I could not stay consistent, no matter what I would do. And it didn't mean that I didn't have weeks and even months of profitability. And that's when you think, wow, everything is good. But it would break down. And then I would, I built systems. I thought I could stay ahead of it by having systems because I could optimize them. So I had optimization, walk forward testing, all that. So I thought it would solve the problem. It didn't solve the problem. It just was another manifestation of curve fitting, tweaking and tuning. Whether you use a screwdriver or you use a computer, it's all the same. So it works fine on a car, at least when you could, but not anymore, right? So I stripped it all away. I threw it all away. And I kind of got back to what's the basis of the market. I learned market profile from Peter Stadelmeier back in 1985, I think it was. And that really resonated with me, but I still couldn't make any sense out of it. It was really, because I was holding on to my indicators, my security blanket. I'll put them together and make it all better. Well, not so much. It was just another manifestation of garbage. So over time, I just started removing things, and it was one of the hardest things I did because you're used to something on your chart, and even if you're not even looking at it anymore, you just have it there, So it took time. So now we're having a counter rotation. Let's take a look. So eventually I got rid of everything, and now I just read the language of the market because it's the purest form of information. I'm not using a lagging indicator to tell me the market's going up. I can figure that out. What I need to know is where is the outside edge. It's their low volume node, and then I have another edge out here. This is the retail price. If I cross this, then I can continue to squeeze and I might come back out here. If I can't get above here or only test it and only test this micro high volume structure, I can continue down towards my target. We're also getting into lunchtime, and often at lunchtime, we get counter rotations and squeezes. If you're keeping statistics, you would understand that the condition of the market can change during lunch because the volume tends to dry up a little bit, and it's easier for the market to move because the book often gets thinner. And these are other things you need to learn about. You can learn about this in Trader Lab if you're interested in it. And there's no cost in Trader Lab. If you want to come to Trader Lab, you can use the link in the bottom of YouTube. You're all invited. It's cool, very cool community of like-minded traders who've come together. You may find that it makes a big difference in your outcome. And while past performance is never indicative of future results, I will suggest that many traders who have come to Trader Lab have changed their outcomes. And why not you, right? I'm sure many of you have been in chat rooms and have paid substantial dollars for that experience. And in the end, what has it done for you? If you're now a profitable, consistent trader, then by all means. But if you're still in the same place, waking up with Trader Groundhog Day, then you're just twisting the same thing into the same outcome. So you might want to maybe get off that roller coaster if that's where you are, and then maybe do some other research to see if there's something maybe that'll resonate better with you. There's not one way to trade, guys. There has to be a way, though, that resonates with you, that speaks to you, that you can relate to. That's really what you need. Now, we got to watch this right here. If we come across here, we can still rotate around. Yesterday's low, we anticipate if we come up here to test yesterday's range, our low volume is sitting up in here, so we can still rotate around all this. So we'll see what it does. But I think the short that I narrated for you guys, that I don't call trades from here, was a pretty good trade. What do you think? That's Trader Lab process and methodology. You can learn it. CMJ, what's that? Pistachios? Or are those walnuts? How do we know stops at 56.60? 56.60? Do you mean 56.60? 56.60. Don't think 56.60 is in the yeah. Maybe you mean 55. No, I don't know quite where. Not sure. Liz, why don't you come down to hit the link down there? Come use the link in the bottom of YouTube. Come to Trader Lab. You can ask all these questions there, and I mean, it's the community, mutual support. It's a very robust community. No prima donnas. It's everybody. You learn humility in this business because anytime your ego gets in the way, and I mean yours, I mean our collective egos, we get smacked down pretty well because then it actually distorts our thinking. To be fluid and to be humble. One thing about this business, it will teach you humility because there is no such thing as knowing what's going to happen. We're in a business of randomness. So casinos don't know what's going to happen when they deal the cards either. So if they don't know, how can we know? It's one of the things. So let's take a look. we are still, our target, don't forget, is this area, this, but doesn't have to get there now, ever and ever. But that's today's target, and it doesn't mean anything. It's just the level created by market mechanics. We also have another level down here, which, let me take a look here, 54.80. If we get rocking, 54.80. Doesn't matter. For me, if I'm on this trade from up here, or the other one we had just now that I shared with you over here, the short, and this, and what they say, the Hail Mary pass, those of you who know American football, where you just throw the ball, this one. But this is the primary target. Now, the way I tend to work, and it's not a recommendation, I trade the targets, and then I put the car back in the garage and do something else. So this is the next target. It's on the hit parade. And you guys will be able to watch it. I'm done for today. I got 4 minutes. Final questions. Also, please remember there's 60 PDFs of these structured trades you can download and reverse engineer. It's in the Bookmap Discord Trader Lab community, as well as a library of webinars. You can take a look. This is what it looks like over there. This is the Trader Lab. A lot going on in here. Charts, entries, discussion, all kinds of stuff. You're all welcome to it. By the way, I posted this link in YouTube. It's up there if you scroll up a little bit. It says, I planned, I saw, I traded. It's a terrific overview of this process. You can see it in multiple dimensions. It's a stream I did. It's about an hour and a half. And you can see a very robust overview of the higher time frame and then how it leads down into actionable behaviors in actual trading. It's the way, at least what I do, is when I'm going to trade, I have to be looking, and I'm trading in fractals, so multiple time frames as you think of it. But that's kind of really what you might want to be thinking about. Watch that one. And the library of webinars, it's all in here. Trading high volatility reports, trading gaps, pre-market plan creates an edge, trading VPOC migration. That's always a nice one. I thought that was interesting. Advanced trading rotations with microstructures, anticipating trader behavior. And then there's a lot more. Opening context alignment, 60 structured trades, auction market theory, contextual tips. And by the way, it isn't just me. It's other members in Trader Lab who contribute. Remember, this is a community. I'm just one of many. I just have 45 years of this, so that kind of gives me a little something to contribute, I guess. So if you're interested, visit the Trader Lab, use the link, and please give a like on the way out. Thanks again for visiting Trader Lab today. Hopefully the quality was there for you guys. Appreciate you all coming by and visiting me here in Costa Rica. And I look forward to seeing you guys tomorrow. Please don't forget to give a like. And this stream will be available for review up on YouTube. And you can all watch it again if you're inclined. Hope you got something from it. Take care, guys. Thanks again. And don't forget, we have a target down below. It's not a recommendation, but keep your helmet on. Thanks again, guys. Look forward to seeing you soon. And thanks for visiting the Trader Lab today.